Treading water. As the US dollar continues to strengthen on Fed hike expectations, gold is losing its sparkle with investors. Joining me down the line to discuss his predictions is Fawad from Forex.com. Fawad, the market is widely expecting a positive job report this Friday. Some say if it's in excess of 250k, it will seal the deal for a September rate hike. But just how low could gold go if we do see a strong number?
In terms of the jobs report itself, a number above 250,000 will be significant, but we will need to see a strong pickup in wages. I mean, a lot of people forget that it's the wages that was holding the Fed back from hiking interest rates. So, it's difficult to say how low gold may fall, but looking at the chart, there's not much immediate support below 1080. So next logical target for me would be the 1032, 1033 area, which was the high from 2008. And below that is the 1022 area, which is a Fibonacci exhaustion area. So the potential drop could be significant from these levels if we do see strong employment data from the US on Friday.
Supposing the hikes do start in September as expected, could we see a normalisation in gold prices? And what could that be?
Yes, I mean, gold prices can form a base at any time, even if the dollar remains strong. I think ultimately it's the supply and demand forces that will find a new equilibrium price. That could be at a much lower level, say even below the $1,000 per ounce mark. If you look at the oil market, for example, no one had expected that oil prices to fall as much as they have. And indeed, no one had expected the stock markets to rally as much as they have. Once the market gets used to interest rate rises in the US, we may see, the market, gold prices stabilize. But for prices to really a meaningful rally from their lower bases, it will be, we will have to have some kind of stimulus. As I said, the stimulus could be the price pressures that could result as a result of this easy policy, monetary policy that we've seen across the globe, not just from the Fed, but from the ECB as well, and the Bank of Japan and so on.
China demand is another key concern, with the economic growth rate finding a new normal at 7 to 8%. How could this impact metals?
Yeah, obviously, with China being one of the biggest consumers of gold, the slower rate of growth there is a concern. But China's population is growing rapidly richer, and India as well, don't forget. So the physical demand from those countries should remain solid in the long term. Unfortunately, I think it's the paper rather than the physical market that is kind of driving gold prices lower at the moment. And because of that, it doesn't matter much what the physical markets do at the moment, because, as I said, sentiment in the paper market is very bearish.
And with all that we have discussed in mind, is now a good time to hold gold?
Depends on how deep your pockets are. No, I certainly wouldn't buy gold. I'd wait until gold finds a clear base. If it means buying gold at a slightly worse price, then so be it. I think there's no harm in buying at a high level and then selling it at an even higher level. So I think my advice would be to wait for price to form a base and then buy gold.
Fawad, so good to speak with you. Thank you. Well, that's all from me for the moment, but do click back for a Super Thursday showdown with Sinead McLaughlin. Goodbye for now.